All right. Well, our entry video did not work this time. Welcome to Cardone Debates. We have some new guests. I'll bring you guys on individually, but today we're going to be talking about the paper Bitcoin. Is it good for Bitcoin or not? And all the associated products around Bitcoin.
Diana, where'd you go there, sister? Yeah, it's good. Sorry, I was trying to.
Can you hear me now?
I can hear you fine. I've heard everyone very well. Good to see you. What is it? February the 3rd, 2026. Hey guys, we've got a number of different people here, and we've just kind of finalized our topic after weeks and weeks of thought and putting this into AI.
Yeah.
A lot of discussion on Bitcoin, self-custody, and then all these paper products, all these derivatives, what they call paper Bitcoin. What we're going to talk about tonight is the STRC products, or some of the yield-bearing products, or like my brother's doing real estate in Bitcoin. Are these products bad for Bitcoin, or are they good for Bitcoin? Because I hear oftentimes people come in, friends of mine come in, they make an allocation to Bitcoin after studying it a while, or they just trust me. And then I hear a guy go, hey, look, if you haven't taken that first $5 million that you invested in Bitcoin and stick it into a treasure, you're not doing it right. And I'm like, wow, that took me 3 months to talk to this guy. Now he's all worried that he doesn't have the right color or the right combination of Bitcoin, that maybe he was supposed to pick the orange Bitcoin with the other ledger wallet, and he gets really confused and backs up. So I just think it would be healthy for us to debate, is Bitcoin available and good for everyone, no matter how they want to consume it and treat it, or is it for a special group of people? Now, having done that, can you just check my Skype, make sure that I'm broadcasting this live? Because it just looks like a really small number of people between you and me. Because I didn't see this in my StreamYard feed. I had to just go to your link, and maybe that's fine.
Sentiments down. That's what that means, I guess. You're streaming. I'm streaming.
Okay, cool. Hey, you guys repost the room.
Jinx.
And if you have a position and you can articulate it, ping me or Dana, and we'll let you up on the stage and have a good, healthy, productive, educational debate designed to help the audience. This is not designed for me to walk away with a trophy going, oh, Gary's right. These debates should be really about helping the audience figure out what is best for them. So Dana, why don't you introduce our players?
Chris, thank you for joining us. Can you give us a background on you and tell us why we should be listening to you about this subject?
Yeah, absolutely. Was a speculator in 2017, Bitcoin, summer 2017. That led to reading the Bitcoin Standard by Safety and Moose in 2018, and a lot of great thought leaders over the years. A lot of great plebs on X, been following for a number of years. And that led to Bitcoin, in my opinion, being apex money. After reading Bitcoin Standard and several other books like Digital Gold and others, that kind of led me down that rabbit hole. And that led to, COVID and everything else that happened the past, 5 years or so. And then, so that led me to MSTR shareholder since 2021, been following the space from the corporate level for a very long time. So I've looked at it from two different levels, from the corporate level, but also at the kind of the Bitcoin base layer, the technology. And in my opinion, it's the apex money of the world. And we're in a very interesting transition right now.
Yo, Chris, how long have you been a strategy holder?
Since 21.
And what's your average price, man?
Oh, I don't know that offhand.
Yeah. Are you in the money or out of the money?
I mean, I would consider it in the money. I don't have that.
No, you're in profit right now? Because I think a lot of people are,
well, we're all managing. We're all managing our positions differently and things like that. So.
Yeah, no, it's just, for me, it's always good. Hey, we're like, especially in Bitcoin, I've learned that someone with $300 average cost of Bitcoin is very different than someone has $70,000 average cost of Bitcoin. Same volume, exact same volume, thousands of Bitcoin. the perspective is very, very different. I've learned to ask that question over and over. It's been really helpful to understand why someone's doing what they're doing.
Sure.
So that was the only reason.
Sure.
I own STRC strategy also, and I'm probably getting hurt by 20% right now, but you know, shit happens. So good to have you, man.
Yeah. Thanks for having me on.
Look at who it is.
Marilyn Hodel.
Marilyn, beautiful palm you have there, buddy. I just read all your fingerprints, and the World Wide Web will now be able to steal everything and plan a murder on you.
Well, he's moving back to his office right now. So we can't hear you right now. So it might be because you're in the car. So we'll get back to you. Grant's having some connection issues.
Yo, can you hear me now?
Yes, we can.
We can. It looks like you're in an earthquake, bro.
Yeah. That's what I was going to say.
I think Grant's in his.
Yeah, you can hear me now?
Yeah, yeah.
I can hear you, dude. Ain't nobody. You don't have to. What do you have to say for yourself?
Yeah, dude. No, I'm on a machine. I'm on a machine that vibrates me. Hey, Grant Cardone here, guys, real estate investor and Bitcoin and a Bitcoin advocate. Dana, can you hear me now, guys?
Yeah. You're doing your lymph drainage at the same time?
Yeah, looks like you're masturbating your head there, buddy.
Oh, wow. That's a lot. So Dana said I should say why you guys should listen to me. You probably shouldn't listen to me. You should listen to yourself, collect a lot of information from a lot of people, and then decide what's true for you and go with that. I find that to be very good advice. And, you know, I'm just here to most of these guys know a lot more about all this stuff than I do. I'm a simple guy. We buy real estate and we invest a portion of our real estate investments into Bitcoin so that it still cash flows, and we like the two of them together. And I just came to support my brother and Dana.
Cool, Grant. Always happy when you can join. You bring a lot of color and enthusiasm. So you can do whatever exercise you want when you join these debates.
You know.
Maryland, I don't know if you can talk now.
I can.
Can you say something?
Can you hear me?
Oh yeah, okay.
There we go.
Thanks for joining. Tell us about you.
Marilyn Hoddle. I've been in the space for about 5 years, and I tend to focus a lot on kind of what the transition can look like between this system to the next, and pontificate a lot about what an age of AI and Bitcoin could mean. I believe we're going through a paradigm shift, and there's a lot of nuances to that. Basically through the transition process. So I spent a lot of time kind of thinking through that and writing articles and essays.
Awesome. Okay. So we're going to be talking about, all the different options of paper Bitcoin. But you guys are interested in, strategy. I'm down on that. Gary, are you still buying?
Marilyn, good to have you, buddy. Glad you joined. I love having the people that come in from spaces often and show their face and have the conversation. I really think that's cool. And I think it's really healthy to talk about the transition. I don't think we talk about that like this does, this is not easy, okay? Like scaling is going to be a challenge for Bitcoin, just like it is for Chevron, Visa, MasterCard, US governments, militaries. Scaling is so hard. And when you don't have a centralized authority, I think it becomes even more problematic. You're almost asking the world just to accept you at whatever rate they're willing to accept you, but we don't have a common message. We don't have a core message. This should be a really interesting conversation, actually. I'm already seeing the heat in the messages saying, hey, paper Bitcoin is the reason for this bear market. Bitcoin and self-custody is the only real Bitcoin. And that may be true, by the way. Okay. But, this is the side of the debate I'm going to take on. If you want adoption at a global scale before the year 2100, you will not do it without Wall Street. You won't do it without PayPal and Visa and all these players involved in some level. and the people like my brother, the entrepreneurs that are building paper Bitcoin products, and he's bought 4,000 Bitcoin in 6 months. So like for me, these products for a Dana or my sister who's got $300,000 sitting in a bank account making zero, that product should be in STRC right now making an 11% yield if she needs more income. It should not be sitting in a zero. And so I think of all these products and go, hey, these are stepping stones into the best money I've ever seen. For sure, not perfect money. We must quit saying that it's perfect money. It's not perfect. Okay. It like this yesterday, we decided it's not perfect. It's got little issues all over it. So, but it, in my opinion, is the best store of long-term value. But I hear this often in the crypto spaces that it's not, you know, the kind of Bitcoin I'm getting is different than the kind of Bitcoin that's going to save the world. And I think if you want adoption, you're going to have to accept that those who have distribution, if this is a real thing and they can't copycat you, they're going to adopt it. And that's what I'm here for. Otherwise, I think all the old Bitcoiners should probably sell their Bitcoin to me and Grant and let us go on the next 10-year journey with this, because y'all clearly do not believe that Bitcoin has $1 million valuation because you're not putting liquidity in the market. I mean, we're squeezing the market for everything that it can do, and it's always going to be harder on the sales than it is going to be on the purchases. And we're seeing it right now. Okay, any weakness on the demand side, people are beating this thing up, and I don't see inorganic demand coming. Like it needs to come from the outside and stay here. And I've just not seen it yet. And most certainly it's not going to be, oh, we have to do
But Gary,
this.
I don't think.
Go ahead, Grant.
Yeah, I was
Yeah,
just going to
bro.
say, I don't think I got this big lag between moments, so I don't know why, but you know, the thing that we're experiencing right now, like as somebody newer to the Bitcoin space, I haven't been, you know, I haven't been here since the very beginning and learned as much as many of the maxi Bitcoin traditional Bitcoiners have been. So keep that in mind, take that into context with what I'm saying. But one, I don't see the guys buying those Bitcoiners. I don't know why they're flushing out right now. It's not real to me because it was a price. I've heard, oh, well, I got to 100. That was their target. Okay, maybe. And then I heard, oh, because, you know, BlackRock's entered the game. Okay, that's why they left. They left because BlackRock entered the game, and it's not the Bitcoin they signed up for. I don't know. I don't. That's hard to believe too. You know, I don't know why, but I do know this. I don't hear guys talking about buying right now. Many of those people that are in rooms saying Bitcoin forever, to the moon, it's the greatest thing in the world. So those guys are either out of money, and the fiat haters are out of money. That's the only way you can buy your Bitcoin. You don't buy Bitcoin with Bitcoin. You buy it with fiat. So they're either out of money and they don't have any more fiat to trade to Bitcoin, or two, they don't believe in Bitcoin, or three, I guess, hey, there's another bottom to be put in, but I don't hear anybody really talking about that. I don't hear any advocates saying I'm waiting for 40 to buy it. But I don't think any of this has to do with the old Bitcoiners correcting the market. Now, could the OGs, could the guys that own 10,000 coins for $10,000? I guess there's some of those. It's not even real to me. A guy put 10 grand in it. He's never had money in his whole life. And now he's selling it. He's going to end up with $900 million. Trust me, that fiat, by the way, if this is his first money ever, that fiat will end up back in the hands of people that know how to multiply money and scale money. Okay, you're not going to just sit on $900 million. You're going to get bored. Bored money finds another place to live. and it's got to go someplace. Or, by the way, that old Bitcoiner is back into his original premise. Bitcoin's not what it was, so he's going to bail out. So he went back to the fiat program that he used to be in. So what's he going to do? Go buy silver and gold now? I don't know. Maybe it's all very confusing to me. I hear one thing in these rooms, and I see a lack of action on the other side. Now, regarding the thing about whether it's paper, ETFs, BlackRock, Vanguard, or whoever holds it, Coinbase has it, it is absolutely not real to me that everybody's going to have cold storage, and that's the only way this works. If that, and I'm in the camp with Gary on this, if that's what it takes, Bitcoin doesn't have a future, and I will have wasted money on my logo on my T-shirt.
Dana, this is when you're supposed to pick up the space and bridge the gap to the other conversation.
I actually think that there are some people that are waiting for, it to go lower to buy in again. That's like probably.
Yeah. So what's that number, Dana? Is it?
Well, the 200-week moving average right now is at 58,000 or 59,000. But by the time it gets there, the 200-week moving average, it might be like 60.
Yeah.
But that's if everything's kind of the same as the last cycles. Usually does get down to that level. And a lot of people were saying, well, the 4-year cycle is broken. And this is something that, Ben Cowan talks a lot about. He still does believe the cycle's in place. And now
is the 4-year cycle, is the 4-year cycle broken? It's either broken or it's not broken. Like I keep hearing about, well, okay, there's 4 years. Where's the 4 years at? Is it now? Is it tomorrow? If it's a 4-year cycle, it's either broken or it's not broken. If it's if it's science.
Yeah. Well, if we had, a super cycle right now and we just went to the moon, yes, we could say, all right, it's broken. That hasn't happened. It's now we're trending down. And so, yeah, many people are thinking that, okay, well, even though institutional money has come in, even though all of these treasury companies have started to build up their Bitcoin reserve, the 4-year cycle seems to be in place.
If I could jump in real quick.
Yeah.
Just real quick. Just more of like a level set. You all had Parker Lewis on, I believe, last week or 2 weeks ago. It was a great live stream, by the way. If I had to, all the guests you guys have had on so far, I align with Parker probably more than anyone. So to kind of give you a glimpse as to me in like a 1-sentence thing is that Bitcoin is the best money for human civilization. That's the very top of the funnel. Now we can go into a lot more details on this and this concept of you have the fiat system, you have fiat money, and then you have Bitcoin as money. 2 separate financial systems, very similar to what Jeff Booth talks about. So if I had to pick 2 people in this space that have spent tens of thousands of hours studying and writing phenomenal essays and very deep research, I would pick Jeff Booth and I would pick Parker Lewis. And that's who I would align myself with as far as how I see Bitcoin right now as money for human beings. But then the second part of that is now you've got a bridge, because I think when you say you have 2 monetary systems, they're integrating right now, and that's where all the confusion and volatility is. But when you can like have it in your mind and your eyes and you see there's 2 separate financial protocols, 2 separate monetary protocols, it then makes the conversation very interesting. And then we can kind of mesh it together as we go.
Chris, I would agree with that. We're looking at a monetary paradigm shift. One asset is going through price discovery and hasn't gotten its rooting yet. I would even take it further than being the perfect money. It is perfect collateral. There isn't another collateral like it. It's just the market doesn't understand what it is yet. Ultimately, Grant, but Dana, the 4-year cycle, that's a trader's coping mechanism to try to explain things, to be honest with you. People have tried to tie it to business cycles, liquidity cycles, political cycles. In all honesty, yeah, there might be some correlation here or there, but that's breaking out. Bitcoin ultimately has been in a super cycle since it was released, and it's going to continue. We go through these stages where these busts and booms and busts, and they break down, consistently, we have to wait for a reset. Now, if I look when I came in 2020 I looked at this asset 3 or 4 times before 2020 and declined it. And the reason being is because the education wasn't there, right? 2020, the education finally came live. I think my intro was Robert Breedlove's letter to Ray Dalio, where he kind of wrote to Dalio and said, hey, listen, based upon your book principles, this is why you should invest in this asset class. That was the point at which I started my journey down the rabbit hole, and it hasn't stopped since. Grant, going to your point, I think that the powers to be potentially understand what this asset class is, whether they're honest about it or not to the public. And I believe that the administration or the powers to be are ultimately it's going to have to be a top-down approach for Wall Street and the rest of the market to accept it. I don't think we've already gone through our grassroots effort to get it to kind of this commercialization standpoint. But I think it has to be a top-down approach.
What do you think it's been thus far? Bottom up?
Yeah, I think it was a bottom-up approach until about 2020, and that's when it started hitting mainstream. You could even make the argument in 2017, it started to kind of peak in, but 2020 is when Wall Street really started taking notice of it. And I think the commercialization, the financialization of it definitely happened within the last 2 years with the ETF, right? But the problem, I still think that there's a lot of manipulation in Bitcoin's price with the paper products out there. Good or bad, it is what it is. It's keeping the true value of Bitcoin from reaching full potential because it's distorting the absolute scarcity portion of it. So, I've been theorizing. I mean, there's a couple different ways that could play out where it would change, and potentially, Dark Side's talked a little bit about the paper construct basically breaking down based upon the silver market. And if that's the case, what if the administration, I play a lot of what ifs, but what if the administration comes out and states, hey, listen, anything that we deem a strategic commodity, you're no longer allowed to short or, have derivative products built around it. It's not impossible to think about it. I mean, they could do it.
They could do it today, man. They can do it today. There's a lot of things they can do. Let's just go back a couple of points though that you made, Marilyn. I know both the guys you referred to, Parker and Jeff, and I like both of them. But I will say that Jeff Booth believes that if Bitcoin doesn't go retail for consumption, buying the Mars bar and the potato chips that I bitch about all the time, that it won't be a success. And therefore, if you believe in Jeff Booth, and I think Jeff's a great guy. He wrote a great book called The Cost of Tomorrow. Excellent book, well worth reading.
Price of Tomorrow. Price of Tomorrow,
pardon me.
Yep.
And he and I agree that I believe in hyperdeflation. Like everything's going to be nearly free in the future. But based on what Jeff says, then Bitcoin is a failure today. Absolute failure right this second. And my problem with some of these people that say things, even Parker wants this to help the retailer. He thinks retail is the merchants themselves will drive adoption. This is not true, man. The consumer will decide what he's going to use. You cannot expect 52 million merchants to figure it out, especially when they have Visa and MasterCard offering them insurance products and their customers' insurance products. And the product that you're talking about converting to consumers has no insurance whatsoever. This is a very big swing for 170 million consumers in America to give up their refund and chargeback and dispute rights. There's 600 million of these dispute rights a year in the United States. Someone's using these insurance products, right? So to tell me that, you're going to use Bitcoin to buy potato chips is the course of adoption, and the potato chip retailer is not committed to keeping the Bitcoin on its balance sheet and or giving me a 20% discount, for me to use cash, I'm better off using cash. Like, to me, Bitcoin's ability for me to arbitrage the old system is beautiful. Why would I not want to use Bitcoin and move between? One of you guys, I think it was Chris, Marilyn talked about the bridge between these two worlds. Dude, I want to jump in between all the bridges. When there's no toll fees, I want to jump over there, get 4% money, and then jump back here, call Coinbase and go, dude, I'm getting 4% money now. I need 4% money, not 7. Okay. Like, to me, it's beautiful to live in both these worlds, to be able to move in and out of these worlds and exploit the shit out of the old system. That, you know, I love the Bitcoin community, but y'all know more about your product than you know about the enemy's product. Far more. And I'm just very pragmatic. When it took Visa and MasterCard 52 years to get credit cards in our pockets, all of our pockets, someone should look at that and go, wow, seriously? Did it take 52 years for probably the best duopoly in history, the most secure, regulated duopoly in history, makes massive margin, and it took them 50 years? I mean, American Express got 3 or 4% of the market. That's it. Ant Financial came here and left with their tail in between their legs with all their money. Okay, so like, I find that amazing. Wow. You know, the natural gas pipeline industry and the oil industry did not just pop up yesterday. Okay.
Gary, what are they all built on?
What are they all built on?
They're all built on a dollar, right? And what is the dollar essentially? What's the mechanics behind it that makes it work? I mean, whether it's projection of power, but it's really the treasury market.
Yeah, I agree with you, dude. Okay, but I do agree that
Gary.
Well, everybody's having problems, but me and you, Dana, we're like good to go. Chris seems to be good.
I think we're good here.
Let's go.
Yeah.
Look, I'm not trying to compare the two, because I don't think you can really compare the two. We can say, hey, what's it built on? But the truth is, this is how adoption works. You can say I'm wrong, but you will have no other historical viewpoint to go, oh yeah, that scaling was really easy for that company. No, it was hard for Morgan Stanley too. And once you get the customer, it's hard to keep them. And yeah. So what I'm really saying is that
can anybody hear Gary?
I think everybody can hear me. Maybe get out and pop back in, man.
I think you're good now, Marilyn.
What do you think, Chris? Am I crazy?
Yes.
I mean, I think both of these things can be right too, right?
Again, the hopping, right? From one system to the next, it's like every sentence goes from one protocol to the next, and you can be right in both sentences, but also if you're on the other side, it's wrong in a sense, right? And that's where it's all mixed together. I wrote an article last week. It's like the $1 million arbitrage hidden in plain sight. So Gary, me and you are on the same exact page. Like with STRC, you take the risk-free rate, air quote, from the fiat world, right? Or what you can borrow from. If you got good credit, you got good relationships with banking. With this system, you can get 5%, let's call it 5-6%, and then arbitrage the 11. So you net carry, positive carry 5%. It's unbelievable. It's incredible. I'm not telling people to go do this, by the way. This is just hypothetical. But just
hey, Chris, let me give you a real life example. I was with my bankers last week, and for you guys that go, hey, what's it built on? And everything, just understand what my position is, okay? Here I am, a TradFi guy. I came into this. By the way, all of you guys were TradFi guys before you came in here, okay? You've all been using fiat money, and then you converted. Awesome. I'm happy for you. But here I am, a TradFi guy. I go to my bank Monday, have lunch, or whenever it was last week, and I said, look, you guys have me stuck in some bonds, some treasury bonds that are making nothing. And why are they doing that? Well, they loaned me a bunch of money to buy a house that I have, okay? And they gave me a bunch of money, and they gave all the different kind of colors on it. I said, these bonds, and they require, for risk management purposes, they require a bunch of those stuck in treasuries. And I went through the math and showed them how poorly performing those were, and it was dragging down my return. They made 7 margin calls on me 2 or 3 years ago. I paid every one of them. On time, done. I'm a good customer. I looked at them. I said, look, I have the ability to go into an STRC product by Sailor, which, by the way, you guys are already giving me millions of dollars of leverage on, because STRC sits in my account with them. So I already know, oh, wow, tons of liquidity on on strategy, MicroStrategy. Their risk guys are giving me 75 or 80 cents on the dollar for every dollar of strategy I own. I said, look, you've already validated that MicroStrategy is solid. STRC sits above that stack. This is his dividend yielding monthly product of about 11%, 11.5%. That's preferred. So if you've already approved strategy, your risk guys are most certainly going to approve STRC. Why don't you move? I think there's $5 million in treasuries there. I said, why don't you move 2 or 3 million into something from 2.5% or 3% to 11? And they were like, wow, we've never heard this idea before. Next day it was approved. Now, how is that bad for me, guys? I just took $2.5 million and moved it into Bitcoin, dude. Like,
Just
I
arbed
think
it.
it's, huh?
You just arbed it. It's perfect.
Right? I mean, now, is that a good product for Bitcoin or not?
Depends on who you are. And I've talked about this a little bit. I mean, if you're a pleb, okay.
But see, I wouldn't look. It most certainly, if I could have done it into something else, guys. I could have gone into my brother's real estate deal. I could go into some other
Well,
products.
would you have had the same liquidity in your brother's real estate deal?
No.
Yep.
But what the point I'm trying to make is, you guys are saying it's good for Bitcoin if it's the right guy. I'm saying, hey, it brought me into Bitcoin, and I was able to educate 3 bankers who had never heard of STRC.
And is it good for Bitcoin? Absolutely. Because once it hits par, Sailor's ciphering money off basically to go buy more Bitcoin, right? I mean, that's the feedback loop. So the issue is, you have like the True North guys and all the TradFi guys going through mental gymnastics trying to describe what Sailor is, right? And try to describe what the flywheel is. My perspective is the flywheel hasn't started yet. Strategy as a whole is a conversion mechanism for bringing this system into the next. And all he's going to do that by kind of realigning incentives. So right now, he's what, Chris, 11.75? Is that what he's paying?
11.25.
11.25.
Yeah, just upped it.
I mean, you can make some arguments that the 11.25 is basically where the natural cost of, the cost of money actually should be in a functioning economy, right? The yields we see on the 10-year treasury, I think that today I looked, it was like 4.28 or something. It was bouncing around, but and that's a suppressed rate, right? The treasury ultimately, in my opinion, there's a battle going on between the treasury and the Fed, and the treasury's most likely going to win. And they're going to have to go into yield curve control, right? Which means they're going to continue to suppress that rate. And if I'm correct, this country is ultimately going to have to go into like an infrastructure build out to win the race for AI. And that's going to take trillions of dollars. And what does that do? That ultimately inflates the dollar even more. And once you have inflation coming back into the market, who's going to want to invest in a treasury when, there's yield curve control going on and you're only getting 1% on your treasuries? At that point, what makes more sense? Sailor being at 11%, or say at that point in time, and that I put an essay out about 2 weeks ago. And the key point of that argument was, right now, Sailor has his rate basically attached to some type of cost of funds or some type of treasury benchmark. What if, when we go to yield curve control and Sailor and basically inflation starts picking back up, Sailor goes, you know what? I'm not going to, because Bitcoin would be singing by then. I'm not going to follow the benchmark rate. I'm going to provide my investors with a real rate of return above inflation. And he can do it because the ARB on Bitcoin at that point should be kicking into high gear. So that was kind of the argument that I made in an essay that I wrote about 2 weeks ago. And at that point, he has the collateral to do it. I think the world's quickly moving towards it's looking to recollateralize. We can definitely see it with the East and China. I think the West is potentially doing it quietly with Bitcoin. And I'm seeing a lot of articles. I don't know whether we have the golden Fort Knox or not, but there's a lot of volatility in the commodities markets. So I think what Saylor's creating is whatever's coming. And right now it seems like there's a recollateralization effort. Whatever's on the other side of this is what I think Saylor's positioning himself for.
Gary, what do you think real inflation is? As far as, do you see that as like monetary inflation, or do you see it as CPI? Like, what's your stance? You know, because we all have different kind of stances of what we think, what that input number is. Do you?
Well, I don't really care what you call it, but I think the inflation that we have experienced in the last 4 years from COVID was not monetary inflation. It was intervention inflation. Blowing up pipelines to Europe inflates the cost of energy to the user. Just go ask the bankrupt, yet to define bankrupt Germany and the UK. They now have the most expensive energy in the free world. Germany and the United Kingdom. Okay, that means you are not going to survive the next century. You will literally be at the bottom of the food chain, as all third world countries are defined by their proximity to deep resources. Period, man. That's what defines a civilization. We've won the AI game already because we've won the energy race. We're like, well, this Greenland, Canada, Mexico, South America thing is about resources.
Right.
But let me answer on this question on inflation, because I think the real question is, hey, where are we moving? And I think we're moving to a hyper deflationary environment. And I think I can prove that it's already happening, because I would love for you guys to tell me what is more expensive today than 3 years ago or 30 years ago or 10.
Well, healthcare.
I mean, healthcare, medicine.
Okay, yeah, healthcare, medicine, same thing. Okay, go ahead. Anything else? By the way, I'd say the quality of that medicine has gone down also. Okay, so I think you have to look at quality.
Right,
I can get an MBA for free today. Is that inflationary or deflationary?
I think you can pick the good.
I can access all the information on the planet if I want to today.
Sure, it's not socially acceptable yet. Nobody really understands the value of it. Society hasn't picked up on that yet. But yes, you're right.
Well, I'm sorry, man. I'm sorry, but like I can Uber today and not buy a car. I've never been able to do that. 10 minutes, boom, Uber picks me up. I have dictionaries at the tip of my fingers. I don't even see books in anyone's home anymore. So no one's buying any books. So they're saving money there. I don't think anyone needs any more t-shirts or tennis shoes. So now if you're telling me you have to buy a $300 pair of tennis shoes, I'm gonna be like, I don't think that's in the CPI numbers, dude. See, that's the problem. Like, housing is cheap as shit. And if you decide to live in LA or central London, I don't really have any time to chat with you about your fucking investment decisions, because of course it's expensive there and it's unsafe. Why would you stay there? Oh, I can't buy a house where I was born. Oh, I'm so sorry. The people in the Ukraine don't have a house there because it got blown up. I mean, shit happens, right? So like Americans are so spoiled, it's unbelievable.
Yeah, but wouldn't somebody like Infra make the argument that?
Yeah, but look, we're Infra can join anytime he wants.
Wages haven't kept up.
Okay, but oil
prices
are lower than they were. Natural gas prices were $7 when I started buying them 35 years ago, and now they're $3.50. I can buy a $20,000 automobile if I have the lack of ego. Like, what's more expensive, man, besides healthcare? And I do agree with that.
I just lean on the fact I like monetary inflation as a quasi benchmark versus a CPI or a basket of goods that someone puts together and then tells the public that's what their inflation is. I don't believe in that. Like, I believe it's around 7 to 8% is probably a fair number And a lot of people that have done a lot of deep thinking on this in that range as well. So the reason why I threw it out there is because if monetary, let's just say an if then statement, if inflation is monetary inflation, if it's 8%, and then you have T-bills, let's just say the risk-free rate in that fiat protocol, and the fiat protocol getting 4%, you are a negative net carry 4%. You're losing 4% of your wealth when your fiat units are losing 4% a year. It's called a savings vehicle in T-bills or savings or annuities or CDs, or insert your fixed instrument that pays a coupon monthly or quarterly, whatever. Those are negative yielding if the input number is 8%. And what that obviously means is that they are an impaired instrument. And so we would have around $20 to $25 trillion of impaired instruments that are called savings technology for the United States citizens. And if people woke up tomorrow and figured out what we just said and thought that was true, what I just said was true, you would see capital move so fast, because if you realize you're getting a negative 4% net yield, what are you going to do? Right? It's not hyperinflation, but when people get hyperinflated on, when fiat currencies die, like Parker was talking about, fiat currency is the end game of fiat currencies is they die. And people don't like talking about this stuff. And I understand it. It's very emotional. It's very sad. But if you're in a country that's not on the dollar, the Bolivar, I can go on and on and on, all the fiat currencies that have not just had one hyperinflationary event, but multiple hyperinflationary events. You know, that's why Wences Casares got in it in 2011, patient zero, one of the first proponents of Bitcoin to be out there and talking about it, because his family went through hyperinflation twice. And so they escaped the fiat system to go to the Bitcoin system because of that hyperinflationary environment that they were in. So again, if 8% is the input, is that what that inflation is 8%, how many negative yielding instruments are out there, and how much trillions of dollars are losing value that are inside of a savings technology,
including our entire bond market. And Gary, you also have to look at shrinkflation too. Right?
What?
I mean, shrinkflation, right? Just the packaging and the value of what you get for what you're actually buying. And I've heard you go back and forth quite a bit, being around housing, right? And housing is more expensive. And when you take it into comparison to wage growth, it's not even close to where it was back in the 90s or the 80s or the 70s, right? So, you know, and yes, people can move to renting. You can still go rent a spot, and you can stack up with a couple roommates, and you can get something pretty nice. I guess a lot of it has to do with the idea of what was before and what it isn't now. And I understand that sucks, you know, that's a reality, but the dynamics are very different than they were before. And that's because, you know, the debasement has eroded away the purchasing power of the dollar, and the economy's essentially been rotted out through Trippen's dilemma.
Yeah, I don't see how a house is more expensive today than it was. I got to tell you, I don't really see that.
Real estate prices haven't gone up over the last 30 years.
Oh, sure they have. Sure they've gone up over the last 30 years. But
and they haven't outpaced the wage growth.
This is what the issue, I think. Okay, so I mean, if we just could use an example of what housing really means, are we talking about the $50,000 a year player or the $120,000 income player? Because I can build a case that a $50,000 a year person should not own a home. It is fiscally irresponsible. Okay, if they can't buy the house with cash, this is the Bitcoin house conversation. What would the price of a house be if you didn't get 80 cents loaned to you on the dollar? What would the price of Bitcoin be if you got 80 cents on the dollar to buy every Bitcoin you wanted to buy? They would be different for sure. So I don't think a $50,000 a year person should be buying a $300,000 home. And if you're telling me, oh, wow, the price is inflated, leaving the $50,000 a year guy out there, I'm like, hey, maybe the prices have inflated to tell the $50,000 a year guy, stay the fuck away from this asset. It's going to drown you.
I agree with you. They've been priced out. Now I will agree with you there.
Yeah, but priced out. I'm priced out of buying a $800 million yacht. That keeps me honest, so I don't go into debt to buy an $800 million yacht, man. I think that's good. Prices tell you a $50,000 a year player. You guys are telling me, oh, if I make 50 grand, I deserve to buy a house. Really? Who said that? Try to do that in Paris or London or anywhere on planet Earth, by the way. Like, I don't know where we're getting this. Hey, I've been priced out. And by the way, Marilyn, you kind of made the comment, well, you can go live with some people in the rental property. Now, I don't know why you say that, because I've lived in 15 fucking properties all over the world, and my children were grown there. And I'm pretty sure, you know, people came in one day. I was having a party at my house, and a girl looked at me and went, wow, your daughters have lived in 18 homes that you rented? And I'm like, yeah. And she was like all sad, like I'd put them through misery. I'm like, dude, look at the house. I mean, it's not like it's the worst thing in the world. We're having a blast here. And no one ever knew whether I was renting or owning, dude. It makes no sense. It makes no difference to me whatsoever. I'm going to still have my own fragrance and smell and feeling in that home.
You know, I was referring more to the new job entrant that's looking to come in at 40 or 50, $60,000, you know, within like the white collar world, and basically can't afford to buy a house, right? So that they're going to rent, and they're going to rent with multiple people.
Marilyn, if you're a business owner and you live in the zip code of 33701, I'm sure you would love every one of your employees at 50 grand to own a house in that zip code. And the reason you would love that is they're on the hook, man. You know, they're going to show up every day to pay their bills, right? But the truth is, if I am a parent, or if I'm Dana's mentor and Dana says, hey, what should I do? I'm like, dude, rent, man. You can't afford to buy a home with only 50 grand a year.
You can't afford to do it.
On that. You don't want, why would you want to take the responsibility, dude?
You can't afford it because asset inflation for the last 30 years has priced you out, and the wages haven't grown appropriately.
Okay.
The dynamics of this, the
That's
system's
a market.
dying.
That's a market.
Dying.
But it's a market. And
It's
all I'm saying is that maybe it's a gift to the $50,000 a year player. Hey, stay away from it.
And Gary, can I just say that had the price of those homes not gone up, their uncles and aunts, parents and grandparents wouldn't have any equity built up. You wouldn't have, there's about somewhere between 20 and 30 trillion dollars of equity sitting in homes that people have used to borrow and move an economy with. You would not have that if you didn't have monetary destruction or inflation. So do you guys want homes to inflate or not? Do you want assets to inflate or not?
Grant, you can't.
Bitcoin has been a beneficiary.
Well, yeah, you're creating more units. Again, go back to the two systems. The fiat system, you create more units, right? It's inflationary. Number go up, right? And then those units move over to the other system, Bitcoin, and then that's the driver, right? You're adding more units to an absolutely scarce. There's 21 million cap, like full stop. That's what's happened the last 13 years, or sorry, 17 years of Bitcoin, right? Like that's the top line with that. When more units are created on one system and it comes to the other, then if it's priced in the aforementioned units, it will go up, right? If you're pricing it in dollars. So that's asset inflation, and it's being, you know, those units find its way to very scarce assets.
And you could say the same thing about houses.
Sure, absolutely. No, I agree. I agree with you. Yeah.
Do you know what scares the shit out of me, Grant? And I saw you came out and you were supportive of the 50-year mortgage. What scares the shit out of me?
They ought to do a 100-year mortgage. They should do 100 years.
Is the deflationary mechanism that's coming at us with AI, and not so much with AI like the form that we see it, but the embodiment of AI. When you can take generalized AI and put it into a fully functioning robot, you know, and Elon said he was going to have some this year, and now it's been pushed out. At some point, it's coming. But imagine being able to park all the inputs on a job site and add 2 robots there, and they basically build you a house in, 60 days at 30% of the cost of what it is today, right? And the quality of that house also should be a higher quality than our aging housing market, right? what does that do to the existing housing stock? When
Why does it have to do anything to the existing? Well, I don't see. I think you're building
existings are comp. They're comps.
They're comps.
And you've already priced out the current home buyers from being able to the new entrants to be able to buy new homes. So they're going to, of course, go with the cheaper version, and it potentially could have a higher quality, just due to technology.
Could have lesser quality.
Well, actually,
Could be
actually,
less
the cheaper homes, just to keep it factual, the cheaper homes today are newer homes. Newer homes are selling for the first time in history for less money than the existing homes because the home builders are incentivizing to move their stock by buying when interest rates down. Okay, Gary wants to sell his house. Well, Gary's probably a bad example, but most people that own a home cannot also sell it and be the lender, or buy down the debt, or doesn't know the creative things that D.R. Horton knows. I'm gonna buy the debt down to 4.5%. Guy will have an affordable payment. Cost him 70 grand. He moves his home. He's moving inventory, right? He's got a business. The homeowner doesn't have that option. So for the first time in history, new homes are selling for less than existing stock. Regarding whether there's affordable housing in this country, guys, there is affordable housing. Go to Mississippi. You can fucking buy a house for $17,000. You can move in tomorrow. You could probably move in tonight, not even buy it. You got about 4 million abandoned homes in America. You got 4.5 million apartments that are vacant in America. The same number of single family homes, vacant and or abandoned. The problem is you don't have homes where people want to live. This is what Gary's going back to. Oh, everybody wants to wear Gucci's because we're a bunch of entitled people that think we're supposed to live like our parents and grandparents did. But the reality is our parents and grandparents worked fucking 15 hours a day to make a house payment. Ain't nobody working 15 and 18 hours. You got your grandparents probably built their own home, put on a roof. So, you know, there is the issue with what people want today, and them, rather than investing in themselves or making investments, they're like, I got to own a home in Miami, 2 miles from where I work, and I need a view of the ocean too, by the way.
Yeah. Expectations, for sure.
And then they're like, oh, I've been priced out of the market.
Yeah, to go back to, I mean, look,
Or the kid in California. Yeah.
I mean, I'm saying we, as asset owners, we love inflation. As Bitcoiners, like, I'm just going to be honest, like all the units that get printed and all the fiat units get printed, they migrate their way. Now, it may take some time, right? It takes years sometimes. There's bear markets. Okay, Wall Street is involved now since 2024. We all know about LTCM in 1998. We all know about 87 financial crisis. We know .com. We know GFC. We know COVID. We know all the deflationary, all the, it's a carry trade. The Rise of Carry is a great book for people to read because this entire system is a carry trade. And each carry trade gets bigger, 87 to 98 to 2000, 2008, 2020. It gets bigger and bigger. And it shifts from asset classes to asset classes, right? Certain things get financialized to MBSs, mortgage-backed securities in 1980s or 1970s and 80s and 90s, and then the bust in 2000. That's an example of a carry trade, right? And so one of my things that I've thought a lot about is how we are moving into this. Bitcoin is the apex carry trade. May not feel like it right now, but I feel like we're in the very, very early innings. I mean, Wall Street just barely dipped their toe in the last 2 years, right? Remember, and you guys know as well as I do, more than I do, like it takes them forever to do stuff. It takes them a long time. And just because the ETFs came out doesn't mean everybody showed up at the party on February 2024. It's going to take them time. I know several people in the wealth management space, it takes them a very long time. And so that money is going to shift. It's going to take time, and they're going to dip their toes, and they're not just going to come in and put their clients 50% in the ETF. Like, that's not going to happen. So to me, this ends up being a carry trade of the concept of if the humans really decide over the next 20 years that it's the best money, good money will drive out bad money, which is Gresham's law. Now you can flip it and think and talk about Thayer's law, but you start with Gresham's law, and eventually it may take 20 years or 30 years, but humans adopt the best money and it drives out the bad money. If you look at monetary history over thousands of years, the Yap stones, because it was barter, then Yap stones, then beads, and all the way through, right? So that's something to really keep in mind. And this concept of carry trades is really interesting.
Well, and they're getting bigger, right? Everyone's getting larger. Every break forces more money, into the system or to be printed. It's playing into the whole Lawrence Lepard big print. Question for you, Gary and Grant, does the debt scare you? Does our ability to service the debt scare you?
Yeah, it
No.
doesn't scare me.
The ability to service the debt, none of all this debt never going to be paid off. Okay, we talking about $38 trillion, but like multiply that by 4, because that's you got other countries that are in the same condition. I think it's a little bit like the commercial real estate market. I think the problem is so big that it will be in everyone's best interest just to push the problem out into the future, which is what we're going to do, because it is what we do. We plunge methadone and heroin into the patient and we get them through another 4-year cycle, the 4-year cycle being the political cycle. And I think that's what all Bitcoiners are hoping it's going to do. That's why I find this conversation really bizarre, because you want them to print and then you make them bad for printing. And like, the conversation, just to get back to the debate, I was going to ask you two gentlemen the question, hey, where would Bitcoin be today if Wall Street went, no, we don't understand this Bitcoin stuff, no interest whatsoever? Where would Bitcoin be today without MicroStrategy buying 715,000 Bitcoin and all the other guys that are, some of which are idiots, putting it on their balance sheets? Where would we be today?
Wall Street couldn't help itself. They
Yeah,
needed
but let's pretend like, because you hate them so much, everyone hates them so much. Let's pretend Wall Street's not here. This is perfect money. It doesn't get Kool-Aided by Wall Street. Where would we be today? Because, by the way, I wouldn't be here. I most certainly would not be here in the size I am. I don't think my brother would be here in the size he's in. And that's not a reason to change the answer, but where would Bitcoin be? Because I think it'd be in the $16,000, $15,000, $20,000 range.
Potentially, but I don't even look at that as an option because of the fact of game theory. Wall Street was going to come into the space no matter what at some point, whether it was incentive, well, it was going to be driven by incentive. They're not here because it's a better product. I mean, they barely understand it or believe it at this point. But they see an asset that they can financialize and potentially try to control.
What do you think, Chris?
You mean from like a fiat price, like where should we be or where could we be in Bitcoin?
Well, I mean, look. I mean, look. This is what we have. We have a 21 million coded product, and we have 3 or 4 million that have been completely lost by the very nerds that created it. So this is not a good, like, when you take me through this world, I'm like, dude, you lost 3.5, 4 million Bitcoin out of 21 million. Are y'all jokers or what?
It was early days of mining. It was early days of mining.
Yeah, but it don't matter, dude. Like the excuses. Oh yeah, well, Jamie Dimon's just a pervert. Okay, well, that's an excuse. It went on forever and ever and ever, and we're still pitching this self-custody. So I'm like, wow, you're pitching self-custody, and we lost 3 or 4 million fucking Bitcoin through self-custody.
That's a personal issue. Yeah.
Yeah. No, I'm just saying that like something's not right. These stats, if we're really honest, that's not a good stat. I have never lost a penny working with a bank, not a penny. And
yeah,
look, they're just different perspectives, right?
But unfortunately,
I think it's going to be guys like me that are going to be buying Bitcoin. If Bitcoin's going to do what y'all want it to do, you need guys like me and millions of us. And
why are you still buying, Gary? Why are you still buying?
Well, because I don't have the worries y'all have, quite frankly. I think this is an early adoption phase and that the Bitcoiners are being incorrect in isolating and alienating people to come into Bitcoin however they get here, dude. They should get here look, how do drug dealers become really successful? They give the first couple of ones, dude, they make it easy to have a sniff. We have made it so difficult to get into the Bitcoin rails. It is fucking impossible, okay? Like it requires so much heavy lifting mentally. And it's great if you're 17 and you have nothing else to do and this is your first hop. But to expect, I've literally had people go, hey, you need to study Bitcoin for 100 hours before you do anything. It's like, I'm probably not going to have any interest if it requires 100 hours. Like that, Jamie Dimon has JP Morgan's never spoken to me that way. They're like, would you like an account? How big is it? What are you trying to do? They make it easy on me. So I'm just, why am I in Bitcoin? Because I think this is a great revolution, okay? Why am I doing these debates? To try to help people kind of come together, because I don't see Bitcoin doing all this by themselves, okay? The fucking whales aren't buying any Bitcoin. Okay, Roger Ver and all of these guys, they say, hey, I'm buying Bitcoin monthly. Dude, you have $1 billion worth of Bitcoin. You need to be buying 10 to 15 million a fucking month.
Roger Ver forked Bitcoin Cash in 2018.
You know,
so
yeah,
he's
yeah. Honestly, I could care less.
By the way, that's our other problem. We have 30,000 people that were trying to all cheat Bitcoin.
Block Size War is a great book, by the way. And by writing down the books we talk about, phenomenal book and understanding the history of Bitcoin and what happened in 2015 to 18. Phenomenal book.
Which book is that?
The issue,
Block Size War.
Yeah, the issue is, like you have an emerging asset class and it's filled with grifters. There's grifters and extractors out there across the entire board, right? And like where there's like kind of like a gold rush similar to out west, you're always going to have the BS that kind of follows and tries to take the gold from people, right? And that's ultimately what's happening. Grant, why are you here in this space? What draws you into Bitcoin? I mean, I understand you like the liquidity and it has a different Sharpe ratio to real estate, right? But what draws you in? What was it about the conversations that you had with your brother or Sailor that helped?
Yeah. Well, I've never believed in cash. So I've always converted cash to real assets that are hard to build in good locations and that provided cash flow. So I've always believed in hard work, collect the fiat, get rid of fiat, convert it to something better than what a piece of paper it is. You know, you can look at a $100 bill one time and understand it's been fabricated, like made up. So I always wanted to, I don't want to lose it. I don't want to save it at the bank. So the Bitcoin thing came around. I watched it. And I'm like, okay, I can toy with this. I've never believed in gold and silver. I've never owned any gold or silver because I'm like, I got to store it someplace. So Bitcoin was cool to me because I'm like, I don't have to store it anyplace. The technology interests me. I'm a real estate guy, right? So I got plumbing, fucking roaches, tenants, termites, evictions, roofs, patio equipment. Like, I mean, my wife's got a full-time job just furnishing the real estate. Like she could be furnishing another unit every day, and and by the time she finishes the whole portfolio, she's going to go do another. Like it's endless. Well, with the Bitcoin, it's kind of cool because I don't have to furnish it. It just sits there, bro. I like it. I like the technology aspect. Now, I still, frankly, between all of us, I still don't know if it's real. I could wake up tomorrow morning and find out, you dumbass, you knew it. You know, I don't like the way the people behave here, but I shouldn't be surprised because, you know, people just behave weird.
Well, it's not everyone either.
You know,
you know that. That's not everyone.
You're right. Yeah, that's right. You're right.
Cults
You're
are
right.
forming, right? It has very much has a cult feel to it. It's for better or for worse.
I guess I don't like the arguing though. The arguing for somebody that's trying to promote. When I hear people trying to kill Sailor, you know, it's like, wait a minute, dude. He's on your team.
Or they might be short. Who knows? You know that. You know as well.
Now,
anyway. They might be come on, they might be short. They might have some puts on MSTR.
Yeah, I don't think so. I think these guys.
Maybe.
I don't think those guys are short, and I don't think those guys are short. And it could be just rooms. Anyway, it could be just opinions and drama and blah blah blah. It probably is, right? What I don't understand is why it's behaving the way it's behaving right now.
In fiat terms, right? We're talking about the price
But
of Bitcoin and fiat,
that's
right?
not unusual for me to not understand.
I mean, it's just going to do. Fiat is, it's just, you know, as you guys know, this fiat system is volatile. Wall Street is volatile. You all know, there's games on top of games being played with the price of Bitcoin right now. Full stop. I don't know what they are. You don't. No one knows the games being played behind an asset like this, right? And it's small. It's tiny. What is it now? I mean, smashed in dollar terms. What is it, like a $1.5 trillion? I can't keep up. It's gone down so fast. Like 1.4 trillion or 1.5 trillion. It's so tiny, as you guys know, right? So it's still so early, and that's where the volatility comes from.
But I think gold and silver are signals that liquidity structurally there's issues within the markets, at least with like the paper markets, as well as from a demand perspective. There's something going on, whether it's gold and the world's trying to recollateralize, or whether it's silver and maybe there's a structural issue from a industrial use case projected out. Like gold and silver are sniffing out liquidities coming plus structural issues. You know, historically, Jack Mowers did a episode last night. It was pretty good. I listened to his stuff on a weekly basis. Comes out every Monday, but he was talking about, he's like, this is just 2020 playing out exactly the same way. You know, the markets crashed and gold took off, and then in August it adjusted, and then Bitcoin started taking off. It was kind of interesting because that was right around the same time Saylor did his first purchase. I read the Breedlove letter, and I started asking questions because gold just crashed out of nowhere. And then I made the pivot over into Bitcoin at that point. And so there's things going on, and Bitcoin is always kind of picked up on the other side of liquidity, right? Structurally, I think that's going to change, and there's going to become a stronger understanding of actually what Bitcoin is. If you want to say, Dana, like this cycle, I think that this cycle or rotation, the market's really going to wake up because Wall Street's ready, right? They're positioned for it now. Yeah, I think it's going to be powerful. My other question is, Gary and Grant, what are your thoughts around how impactful AI or robotics are going to be over the next 10 years?
Well, this is where I get really excited about the deflationary story. And somebody said, "Hey, build a straw man on deflationary." Look, it cost me $1,000 a month to have my yard mowed. I love these prices. You know, just back to the inflationary thing. The best thing for prices is higher prices, man. The best thing for innovation is lower prices. So when we got into fracking in the United States, we got there when crude oil was $30 because people that drill holes in the ground, they don't stop drilling because the price fell. They just keep drilling, man. Bitcoin miners are going to mine Bitcoin no matter what. We're seeing that every day. So I believe that in my lifetime, I have more convenience. I live better than every king that's ever sat in office before King Charles. Like I live better than every king in the history of mankind, really. I mean, most everyone does. And that's because of technology. Now, is that really, I live in an inflationary environment? All I have to do is go out and generate $150,000 a year in any city in the United States, and I'm pretty good to go. I can build a decent life. I now have all the tools that would allow me, if I'm willing to study and be disciplined, to learn anything I want. I can connect with people all over the world to get a job. I've never been able to do that. I think I think we use our automobiles 4% of the time and then store them in a garage that takes fossil fuel to build it. That is not efficient. We most certainly are going to be in a marketplace in the future where we're using vehicles, we're not owning them. Okay, my brother owns a jet. I don't. I haven't owned a jet for 5 years. I don't travel enough, so I rent them. I'm cool renting them. No problem whatsoever. Okay. Zero. I go to a hotel room. I don't own the hotel. I rent the hotel. The housing, like if we keep these housing prices going up, even in California, I don't think it works here, but they will do, what do you call it? You know, they'll use machines to build micro homes and everyone will have a place. I don't believe everyone's
They're just going to go vertical, dude.
totally.
They're going to go vertical. Okay. The way they did in Miami.
Clean our food. Okay. Our food gets clean through technology. I think that's a good use of funding. But I think we're going to have robots all over the place, dude, doing like, I mean, I can buy what I'm telling you is I can buy a robot for $12,000 and that cuts me out of having to use a yard man who doesn't show up, who steals shit from my yard. They don't show up, right? I mean, you start thinking about that going, oh, wow, by the way, my neighborhood, after he's done with mine, I could probably have that robot do my entire neighborhood bespoke for their every individual need. Okay, they never ever leave high school. Like they're not going to go to college. I'm going to have that robot working my yard forever and ever. That's one example, man. That's one example. My housekeeper cost me probably 70 grand a year. Okay, she's not perfect. I spend $600 a month cleaning my windows. That's $7,000 a year, man. Okay, like I like the idea of, my dogs cost me a shitload of money. It would be awesome to have a dog walker that does everything perfect, consistent. Oh, that guy also now he's my security. The robot's my security. That cost me 120 grand a year to have a guy 24/7 in my home that can protect me.
Your life is getting cheaper. The future is looking like it's going to get less and less expensive, right? What is the one thing that scares the Right.
I think that has to happen, dude. I mean, I have a $1,000 espresso machine in here that saves me a shitload of money from going to Starbucks.
I love it.
I mean, seriously, I couldn't do that.
I agree.
I've been buying these coffee machines.
Yeah, but Gary, that machine used to be like 15 grand.
Oh, totally, dude.
Totally. So when you say $1,000, everybody's like, "Oh my God, you spent $1,000." But that's all that stuff is getting cheaper. I agree with first of all, I think we will all have robots, a couple of them.
Oh, dude. Absolutely.
You know, I think Tesla was a run at just Optimus. It was just practice for robots. And I was in a room the other day. Is his name Simon? Maybe Simon thinks that Elon's not a real entrepreneur. I'm like, okay, bro. If there's no Simon, that's just the government puffing up Elon. Like there's no real Elon. Elon's not an entrepreneur. Rockets aren't really going to the moon. That Tesla car is fucking fantastic. And back to what Gary said about the Kings, we got air conditioning heater we take for granted. There's no reason for me to own a car anymore. I could simply Uber the 7 miles. It cost me $7 a day, $210 a month. Save myself a $770 car payment plus $200 worth of insurance plus a garage. That makes real estate, by the way, deflationary because now a garage becomes a housing unit. But you know what? People want to own their own car. They're like, I got to have a car. Yeah, okay, maybe. So some of this inflation stuff is made up. And I know when you hear people that have money say, oh, inflation's not real, but I don't have to do some of this stuff that everybody says is so inflationary. I don't have to. You know, when I was coming up, you could get a drink for like $3. Today it could be $33. Is that inflationary? No, man, that's bad choices.
So from a structural standpoint, what is the one thing that scares the shit out of central bankers? Has always scared the shit out of them, going back to the Great Depression. It's always been deflation. Right? Deflation does not work in an inflationary debt-based system. You know, what we have coming in front of us potentially with all the things you guys described, and I believe it's probably going to be exponentially better than that, is a massive deflationary force. And in order to, Gary, if we're never going to pay the 38 trillion ultimately, we have to inflate it away, right? Like, it might come a time where there's no way to inflate that away. And looking at the world from a collateral perspective. Peter Dunworth's talked about this quite a bit, but it's, there is a race to kind of recollateralize sovereign balance sheets. And I think it has to do with the fact that we have this paradigm shift coming with AI and what its effect's going to be on productivity. So just a theory, but
I think productivity goes up, dude. I think productivity explodes. And
I agree with you.
Like I also think that we're using, when we talk about inflation and all these words, like if we accept that 80% of the people go to work every day just to get out of their house so they don't have to be around their wife and their kids, I'm building the case that is not the best employee. Okay. It's also not the best life choice for that person. They're not doing what they love to do. When you remove the need for them to do that, because I think we will do UBI. I think UBI will be cheaper than what we're doing.
I agree with you. And
or
a better
cheaper
value. Yep.
Okay. Now we probably need to put some metrics around how they get the UBI. You should not send me a UBI unless I'm doing something for it. So go clean a road, go fix a robot. I mean, if I was president of the United States, I'd give everybody $5,000 a month. But you got to show up at work 8 a.m. in the morning, dude. We have a highway to clean. Like, this is so easy to fix. If you don't want the $5,000, no problem.
But what does that do to inflate? What does that do to cost of goods with inflation, more units being added to the system?
I don't know that more units are going to be added to the system. We're going to be getting people will not be getting a paycheck for doing nothing. That is unfair at every level.
But if you're just giving,
so grossly unfair for me.
If you're giving everybody 5,000, you're going to be printing it. It's more units.
You're going to print it anyway, dude.
Yeah. What happened to the $1,200 stimulus checks? That was a little, I know it's one variable out of a lot of variables, but what happened then? Right.
Do we think what's happened to the purchasing power since COVID? 30-40% I've seen potentially, or maybe it's not that high, maybe it's 20%, but your dollar's not going as far, since COVID.
Depending on, again, I think the crux of the conversation is depending on the basket of goods you decide to call the basket. We all can make our narrative as to what's being cheaper or it's more expensive. I promise.
Can we all agree that the government numbers are bullshit?
Well, there isn't a metric that, and by the way, this is the accounting guys too, and the consultants. It's not just the government. It's the guys we trust, the accounting team. They have done this. The lawyers have changed all these metrics. To Grant's point, if you can't afford to buy $10 worth of Starbucks a day, I don't think that's inflation. Okay. I don't think to complain, hey, I can't buy a Lego. I looked at these Legos for my kid.
Quit buying it and watch what they do to the price.
Totally, dude. Price will come down so fast. If we started boycotting all these pedophiles, the price would come down on Netflix tomorrow morning. Okay. Like, I think if you stop spending money, the Achilles heel to every one of these players, they are public and they do quarterly earnings. And we just keep feeding them earnings instead of saying, hey, fuck off. I'm canceling you. And the reason I'm canceling you is this. And you make it permanent. And then everybody gets on the bandwagon. They will change their behavior, man.
Or you get social unrest at a certain point, right? It's a delicate equilibrium.
Well, are you really going to get social unrest? Because I haven't seen any social unrest unless the people are paid to go get some social unrest. I don't think that's, what the people should do is go out and get a job.
Agreed.
So back to the point earlier, they say CPI is 2%. They have to say it's 2%. They don't have a choice. And here's back to what we said earlier. If it's more than 4%, if it's more than the T-bills, what does that mean for the T-bills? It means you're treading water in a savings vehicle, right? Again, back to that input. If the input is 2,
Chris, like if you look at me and my brother, 99% of the people on planet Earth have done nothing but go backwards. Okay, so compared,
they don't own assets. To your point.
Yeah, but what did we do different? I'm telling you, I think people think that we had a bunch of money when we showed up when we were 18. We didn't overspend.
True.
When I couldn't buy that BMW, that brand new car, I went and bought a used one, dude. I sucked my vanity down and I was like, okay, you know what? I can only afford a $35,000 car.
Well, sorry, another book. Really, it wasn't a Bitcoin book, but got me flip my mindset to what you just said was Rich Dad Poor Dad in 2015. That's what completely flipped my mindset. I wish I read it a lot earlier, but in 2015, own assets, right? Like period. And then once you get in this own assets mindset, then you say, okay, what's the best asset? I just want the best asset. And then that leads you to Bitcoin. I'm telling you, right? That's the 3-step process that if you go through that, you get to the finish line pretty quick, because then you drown out all the noise. You have to own assets. CPI is 2%. They say it's, inflation's 2%. CPI, it's not 2%. Savings is not 4%. What if it's 8%? You have to own assets or you're drowning below 8%. And it really, in my opinion, you can argue the S&P 500 is inflation. I argue that actually. People hate that, by the way. They don't like me saying that. I got a lot of pushback. But the carry trade, the S&P 500, for those that understand the markets, they see it as money, and vehicles turn into it becomes money-like, is what some of these books are talking about. And so I would argue the S&P 500 is money. What if you made the S&P 500 your money versus bonds the last 10 years? You would have crushed it, right?
Yeah, but Chris, take housing, average housing costs over the years, and then you take the S&P, right, and divide them both by M2, right? Those markets, those valuations are pretty much flat. Like it's all based upon monetary deflation, like debasement. And that's what that number is proving. I think the first time I saw it came out from Preston Pish, and I think Raoul Paul talked about it as well. But it's pretty common out there. And that's the definition of asset inflation, which is happening because of debasement.
Yeah, the money printer, and Tad Smith talks about this. He was a finance presser for 30 years. That clip it's been all over the place for about a year. And he didn't even know. He taught for decades, and he sat there and said, I didn't even realize it. And he was a finance professor for decades. Yeah. The money printer is the S&P 500. When you figure that out, everything that's less, you're like, oh, wow, I have to figure something out, because you're just treading, this is my opinion, you're treading water with the S&P 500. Anything less, you're getting diluted.
Yeah. And I would,
go ahead.
I would make the argument, not the argument, but Gary and Grant, I want to give you guys mad credit. I don't think you started with anything, and I think you guys worked your ass off to get where you're at. And I think there's also a little bit of luck too, right? I mean, everybody has to have a little bit of luck.
We do.
To get in your positions, but like you guys worked your ass off. You built great businesses, right? You have great followings. So I just want to give you guys credit for that. It's well deserved.
Yeah, no, thank you, man. And I look, and I think that's why I come here, because I hear things and I'm like, wow, I wasn't, when I was building stuff, I wasn't in rooms complaining about inflation. One of the things Chris was talking about, hey, look, you need to be investing in something that's yielding an 8% plus yield. The first place to go to is that every year I would look at my own income stream and go, hey, am I getting rewards for my good behavior this year? Now, like, to me, I'm Dana or I'm Chris. I'm like, hey, every year I should be making 12 or 15% more. Oh, that's impossible. Not if you're 12 or 30% greater than all your competitors. It's not. It's nothing to pay somebody another 15 grand on 100 if they're the exceptional player. Okay. And then the following year it's 130. And then the following year it's 147. And then, okay, you have 1 year that your company didn't do well and you didn't get a bonus. Maybe they make it up the following year. And if they don't, you start looking for options. Like the asset we speak the least about is the amount of production a Gary Cardone can create. I've created 400 paintings here in the last, I don't know, and nobody may like it, but it is production. Okay. And it's a lot of production. It's not, oh, Gary painted one painting. Dude, the guy's like, he's smacked. If I paint 2 or 3 paintings a day for the next 2 years, I'm going to have 2,000 paintings, man. Now that's starting to get to, oh, wow, dude, that's scale. That's volume. Now it's a dumb thing, but imagine if someone read a book. They talk about working 35-hour weeks. I don't remember working a 35-hour week. I got to tell you. I think if you want to make real money, you got to be looking at a 75 to 80 work week. And if you don't have a job that does it, you should be reading 6 hours a day and learning something. You don't only have to sleep 8 hours a day. That means I have 16 to be productive. in something. I think
Oh,
if
no
we really
kidding.
look at inflation, dude, I think if we look at the way we use our energy, we are the gross deflators because we don't use our energy properly.
I don't disagree. You got to hustle. Years ago, about 15 years experience of coaching wrestling. For those that wrestled years ago or have been part of that, so I came from that world of just grinder, absolute grinder. And if you know wrestlers, they're absolute grinders.
I
And
knew I liked you, Chris.
See, when somebody, you just know. Yeah, you're just absolute grinders.
I was a high school All-American, so heavyweight.
Okay, I got third, fifth, and seventh in Kentucky. I was Kentucky though, so we're not very good.
Nice,
so.
nice.
So, I mean, I throw it out there, but I totally agree with you. I like holding it back, but yeah, you have to grind. But then again, like to your point, then once you have those excess units, like you've had that success, then where do you store the success? Right, to your energy. Then you have that energy, that excess energy that you've put so much time and effort into. Where do you store that? Right. And that's what's so important, to have that mindset of where then you put it, what assets do you buy at that point, and that's where Bitcoin comes in.
Yeah, see, but I think, and not to be disagreeable, but see, this is a really cool thing. What you do, if you're producing enough, like I really believe income is the solution to 99% of all problems. That especially in this topic, that if you just outproduce and you make more money next year than you made this year, and you keep doing that, and you're working harder than other people, which, by the way, I don't know why. Like, someone congratulated me and my brother for being hustlers. Thank you very much. But quite frankly, like, if I didn't do that, I wouldn't be here. Okay. I would not be living the life that I wanted to live. And I had to sacrifice some shit along the way. I didn't just go, oh, I look at a girl like Dana and go, shit, dude, I'm gonna drop my job for 4 days and go chase Dana. I did not do that. Okay. And I can sit here and point my finger at the Fed and all these people about what they're doing to me, but I should be thinking about, hey, is my energy being marketed, sold, used correctly, turned into something else that makes me more valuable tomorrow than I am today?
Well, and I don't think it's the individuals, right? There's a whole subsect of individuals that are just looking to ride this train into financial freedom, right? I choose to look at it from a different perspective of what this technology actually is and what it means and what could be happening from a paradigm perspective. And there's structurally things happening in the economy and macro economics and geopolitical that makes sense that there's something changing here, right? And there's a lot of forces at it. And if I'm correct, I want to be on the right side of not that trade, but that paradigm shift. And I want to identify it beforehand, and I want to ride that wave. And I think that's I'm looking at it from what this technology is and where it's potentially going and why it's going to happen that way. And I think it's the same way Saylor looked at it. I think Saylor's positioning, if you take it back to like an STRC, like, because you have the knowledge base and understanding of Bitcoin, you're fine and comfortable with that collateral. Not everybody understands what that collateral actually is. And that's an amazing ARB that you can get because you have that knowledge base. Gary, going back to the other point that you said, you brought it up earlier, education's been completely demonetized, right? You can go have conversations with AI for $200 and have unlimited access to like advanced voice at this point, and you can learn anything you possibly want. And and that's extremely powerful. And it's only a matter of time before colleges kind of fall apart.
Well, there you go. College education is going to become much cheaper. What used to cost $500,000 a year, that's done. I mean, I would short the shit out of Harvard and all these schools. Like, I do not see how they survive this.
They buy Bitcoin. That's how they survive. That's my opinion. If I was an institution fund manager, I would be hedging super hard. Bitcoin's more than a hedge, but I mean, they're pretty smart, if you will, right? And so I think that's part of the reason why. But that's a nice way to do that. To get
and they already are, Chris. If you read some of the prospectuses on Harvard, I know Harvard at least has Bitcoin on its balance sheet. Like, these universities are already starting to do that hedge. Yeah, there's a couple universities that have come out
So,
over the last year
so
and a
the
half.
Maryland, the Harvards of the world, they're buying Bitcoin. Are they buying paper Bitcoin? Or are they buying real Bitcoin?
I bet.
And
Yeah.
are
Yeah,
they
I
good
bet.
or bad for the system?
Is it
You're
good
not
or
going
bad?
to hear me. You're not going to hear me push back on IBIT. I think there's risk there, around the derivative, being a paper product versus the actual bare asset. What I do love, Bitcoin's going to have to go through this financialization process, right? It's a double-edged sword. And one side you have basically the sovereign individual. If you want to take control of that asset, you can. And the other side is basically you can use Bitcoin's absolute scarcity to kind of structure it into fiat debt products and kind of realign incentives as we kind of transition into this new system. And I wrote an article in September that's pinned to my profile talking about the sovereign flywheel. And ultimately what that theory was we can take that $38 trillion in debt and we can rebase it against absolute scarcity by embedding Bitcoin into a portion of the sovereign debt structure and basically harvest the volatility to ultimately kind of rebase the entire 38. So we don't have to play the inflation game where we have to worry about inflating the debt away in order to make it more manageable. So I see both sides of the equation, but I certainly like the fact that Bitcoin is a bear asset and individuals could choose to go that direction if they want to. I do think that there's some impeding risk potentially with paper products. But I think the system as a whole is going to, we're not going to get the adoption we need unless those avenues are established.
Yeah, I agree. And I wouldn't even be here if I had not thought. I remember meeting Melker about 4 years ago, and I saw Melker. He'll tell you if y'all ever meet him or see him, ask him, hey, the first thing that came out of Cardone's mouth, and I'm like, dude, we're coming. Okay, the suits are coming. Wall Street's coming, and we will be the guys that fucking move this to the next level. And he was really shocked at my conviction on that. But like, it's so clear to me. Like, if you want adoption, you got to have adoption.
Yeah,
like, you're not going to sell T-shirts without talking to Walmart and Amazon. It ain't happening, dude. Do you know how many people I know that sell perfume? How many Bitcoiners have a really tiny business because they're trying to do it without an intermediary? Some people do it well, okay? But like, if you want global distribution, and we're talking about money, we're talking about something very personal. It has to be as easy as this, man. It has to be as easy as what we're doing right here. Like this is incredible technology that we're able to do this. If I told you we could have done this 5 years ago, you'd been like, no way, dude.
Yeah.
In fact, a few months ago, people were like, huh, what are y'all doing?
Well, yeah, and there's a lot being built on Bitcoin that people don't know what's going on, like with layer 2 and Lightning. There's a layer 3 with Cashew. Like you're talking out, and I've messed with Lightning.
This is
what's that?
This is bad because there's too much to learn. I mean, you got Vitalik saying that they need L2s aren't necessary now.
That's ETH. That's Vitalik. That ain't Bitcoin. That's a whole other world.
Yeah, but as soon as somebody comes into the Bitcoin world, you got to remember, dude, it all looks the same to them. This is a billionaire spokesman for crypto with skinny legs and a bad outfit, and they don't know the difference, man.
Yeah, again, back to the bridge. If you're across the bridge and you're on the Bitcoin land, you know about Lightning, you know about layer 3s, you know about that stuff because you've been following this for a long time. You've seen on-chain, off-chain transactions, you've done all those things, right? But if you haven't got to the other side, you're on the bridge. Just like you said earlier, we keep talking about the bridge and STRC and things like that. IBIT's on the bridge. All these wrappers are on the bridge. The income funds, that's on the bridge. All of these vehicles that are in Wall Street, right? Those are the things, the products that are on the bridge that then, in my opinion, can black pill or orange pill people to get them to the other side. I agree with you, but it's just going to take time. Agree. And I agree with you. Like, is my grandma, grandpa or grandma, are they going to buy IBIT and all of a sudden start sending a Lightning transaction tomorrow? Of course not. right? But they've got exposure to the asset, and they got to pay 25 basis points and all that stuff with IBIT, but it's a net positive. And I agree with Marilyn that those products are a net positive.
Yeah. And ultimately, I think we end up on a Bitcoin standard, right? And those products will be important. I just don't see it anytime soon. I think Bitcoin's place in the ecosystem for the world at this point is going to be pristine collateral. And I think as the world starts to understand what that means and how it actually works, there'll be a dramatic repricing in Bitcoin as the world looks to kind of recollateralize, or they start to embed it into various investment products, or they structure it into a product like a bit bond, right? Or Grant Cardone structures into his real estate projects, right? Like there's going to be this whole structuring process that's going to take Bitcoin off the market, and Bitcoin's price is going to rise as scarcity becomes more of a significant factor in the marketplace. So like I think that's what we're working towards. I think Jeff Booth is always he's investing a lot of his time kind of in Fediman. He talks about it often, right? And making Bitcoin function from a transactional perspective. And I do believe there's going to be a time where that will be important. I just don't see it anytime soon. I believe Bitcoin has to go through this financialization process to ultimately get where it wants to go. Now, if I don't want to promote the essay too much, but the sovereign flywheel aspect that I pointed out was the value of that, Gary, was the fact that it interacts with stable coins, bit bonds, and the strategic Bitcoin reserve that sits on the sovereign balance sheet. And if you get the momentum going correctly, ultimately the Bitcoin, it reactivates the sovereign balance sheet. Because right now, what do we have? We have land and commodities on there. I mean, some countries that are commodity rich have sovereign wealth funds. I think we're in the early stages of trying to develop one. But ultimately, if you can get Bitcoin to start this flywheel where you're embedding it into debt structures, right? And locking it away for an extended period of time, and you're doing that at scale, the Bitcoin on the balance sheet will rise significantly. And mathematically, there could come a time where Bitcoin starts to support the dollar from a collateral perspective, right? It's also going to be inflating the dollar away, but in its place, you're going to have basically a Bitcoin reserve that ultimately kind of transitions us into like a Bitcoin based system, like the Bitcoin standard. There's a mechanism where the dollar could ultimately inflate away entirely. And say you take like the USDTC, like a tether, a US dollar, like the value could basically be, inflated away completely to the point where the dollar's value is basically used by AIs to do like micropayments to each other. But the important part is that whole system keeps incentives aligned throughout the transition so that our lives can continue to operate and function appropriately while the system recapitalizes itself.
Hey,
because
jump in.
incentives are realigned. Go ahead. I'm done.
I'm sorry about that. I do have to jump. I wanted to thank Gary and Dana.
Chris, we're going to close up here right now. We went a little longer, so yeah, for sure. Chris, I appreciate you being here. Marilyn, appreciate you. Dana, as always, you're so lovely to look at. It's painful. I can see all the guys hitting on you in the.
Wow, thank you. I really appreciate you guys coming. And remember, everyone, to follow Chris and Marilyn Hodel. And we're going to see you next week. We do these debates every Tuesday at 5. So we'll see you then.
Dana, awesome
Thanks for the
job.
invite, guys.
Thank you. Hey, guys, appreciate you, man.
Thank y'all very much.
Good.
Thank you.
Bye.
Take care.
Dana, let's talk to